I bet you I can guess what one of the scariest things you do every year. It's usually at the beginning of the year, and it becomes even more scary if you've just done something like sold a home. What am I talking about? That's right, I'm talking about preparing your taxes to be filed. And there are questions that come in all the time to me when people are selling their house, especially right now in this market, is, do I owe any taxes when I sell my home? Well, we're jumping into that topic right now. Let's do it. Jonathan McCoy here at Atlanta's Real McCoy, and today we are talking about that fun topic of taxes. Yep, it's a question that gets often asked to me, and it's one that's definitely coming up right now because of this market and people just selling their homes for so much more money than they purchased them for. And that question is, do I pay taxes when I sell my home? Well, to answer that question, it kind of depends on what category you fall into. To answer this question, I have some questions for you. First thing, is this your primary residence? Meaning, is this where you stay for a majority of the year and call this place home? Next question is, how long have you lived in your current residence? And the final question is, are you a US resident or citizen, or what type of residency do you have here in the US if that answer is no? Those are the questions you have to ask to understand whether you owe taxes when selling your home. All right, I'm gonna start with the majority of people that are probably watching this video, and that's, this is your primary residence, and this is the home you sold. Now, before we answer that question, I want to remind you that I post videos just like this all the time, and if you like this video, hit that thumbs up and subscribe. Your subscriptions and your thumbs up keep me making great videos just like this one. Now, on to answering your question. So if your answer is, this is your primary residence, the next thing is are you the single owner of this residence and do you file taxes as a single person? Next question you ask is, how long have I lived in this residence? If you've lived there for 2 or more years, then you're single owner, filing your taxes as a single person, owned for more than 2 years. Then as long as you don't make a profit of more than $250,000, then you owe 0 taxes to Uncle Sam.
Yes!
Now, what does this mean to be your primary residence and live in a home for 2 years? Well, when it comes to taxes, what they look at is, this is your residence you've lived in for 2 out of the previous 5 years. So it could be when you're selling a home that you lived in it for a year, or out of it for 3, lives in it for 1 more. Well, guess what? That's 2 years out of the 5. So when calculating this in terms of your cost and primary residence, it's 2 out of the previous 5 years. Most people are in good shape. Most people that own a home don't make $250,000 of profit from when they purchase the home to when they're selling. However, we know that we're in a crazy market right now. We know that homes have doubled and even tripled in value. So depending on what you purchased for, how long you've been in it, and what you sold for, maybe you do fall in the category of making more than $250,000. If so, here's what you do. Take what you purchased the home for and subtract from it what you're selling the home for. Now, it's possible that's more than $250,000. Does that mean you still owe? Well, maybe, maybe not. The other thing that you need to be aware of is there are things that you can write off. Now, I am not an accountant, I'm not a CPA, this is not my specialty. So for anybody that's looking to look at taxes, I'm telling you, contact a professional that does that. But I'm gonna give you some general ideas to put you in the right direction. And that is this. You can write off a number of things that you've done for a home, meaning real estate commissions that you paid when selling your home, for taxes that you may have paid when selling your home, for seller paid closing costs that maybe you contributed when selling your home. Anything you did during the process that you may have paid for when selling your home, you can typically write off. So you can subtract that from your profit. Maybe that starts to eat away at that amount of money that you made if it's over $250,000. The next thing is, if you did improvements to your home while you've lived there, this is also a thing that you could possibly write off. So you put a new roof on the home, you renovated the kitchen, you put in new floors, whatever the case may be, whether you did it to sell the home or maybe just as you lived there, you have the potential of writing this off. So for a lot of people, maintenance on a home to maintain it and improve it, there's a lot of money you probably put into your home. So there's a possibility of having a decent amount of write-offs. Again, contact your CPA. Now, let's say you're out there and you're not the single owner. You and someone else own the home. Maybe you're married and you and your spouse both own the home. You file jointly for your taxes. Here's the good thing. For you, if you're selling your home, it's not until you make more than $500,000 in profit before you would have to pay taxes. So once again, that's a big number. Most people are not making $500,000 from when they bought their home to when they sell their home, because remember, it's all about the profits. If you did happen to make more than $500,000 in profit from the sale of your home, then once again, do the same thing that I was talking about with single filers, and that is look into what the costs were to sell your home, as well as what it took to maintain your home, improvements and the like when you own the home, and you can use those as write-offs. Now, we've been talking about if you've owned your home for more than 2 years. However, let's say you don't fall into that category. I helped a couple just recently that were actually in their home for less than 2 years. So here's kind of the two different tax brackets that you'll fall into, or the taxes that you'll have to pay. If you lived in your home for less than 2 years, then you're gonna have to pay capital gains tax, because they're kind of treating this as you made an investment in a property, and even though it's your primary residence, they made the rules that if you list less than 2 years, then you owe taxes. If you've lived between 1 to 2 years, you fall into a certain category. You have to pay less taxes. There's still capital gains to pay, but this is less capital gains taxes. I believe they refer to this as a long-term capital gains. If you've lived in the home for less than a year, then this is short-term capital gains, and you actually have to pay more taxes. Good old Uncle Sam, right? But you will need to contact your CPA to figure out how much those taxes are. So we're not going to get into the weeds of, calculating each person's, amount of taxes, but just know, even if it's your primary residence, you're a U.S. citizen, you are a single filer or joints, even if you made less than the profit of $250,000 or $500,000, you will still owe taxes if you lived in the home less than 2 years. So again, contact your CPA, check it out, figure out how much taxes you would owe. I strongly suggest that either this gets taken out at the closing table, or you make sure you set it aside, because I'd hate for you to make $100,000, $150,000 worth of profit, not know that you need to owe taxes on it, and then come to filing next year, you owe a bunch of taxes and maybe that money's not there anymore. Okay, the next category is, let's say that you're an investor. Let's say maybe you're selling a vacation home, some kind of second home that's maybe near family. Whatever the case may be, it's not your primary residence. In this case, you will owe taxes on the home. But once again, it's about the profit on your home. If you purchase a home and put a bunch of money into it and then sell it, you can write off the amount of money you're putting into that home. You can write off the amount of money it took to sell that home. So there are things that you can write off on it, but you will owe taxes on it. So make sure that you pay your capital gains tax. And once again, not a CPA, so I'm not gonna jump into how much you owe, but if you're an investor, this is a second home and the like, not your primary residence, right? Then you will pay taxes. Now, for those people that are not U.S. citizens, and depending on your residency, you may owe additional tax. Not just capital gains, but of course, they're gonna make more taxes for everybody, and they made a foreign investment real property tax that came with the Foreign Investment Real Property Tax Act, right? In this case, when you are not a U.S. citizen, and again, depending on your residency, so let's say you're on a vacation visa here, but you own a property, then what they do is they actually add on 10% at the sale of your home, and they take it from the gross sales price of your home. So it's not the net, and it's not capital gains, it's actually just a tax of 10% when you sell. That's something to be aware of if you're purchasing homes and you're a foreign investor coming here to look in the US and buy. You really need to look into the price of the home you're purchasing and what it could sell for, because they have different price brackets. I want to say it's like from 0 to 300,000, 300 to $1 million, and $1 million plus, that you'll fall into the different percentages of what you may be paying tax-wise. So talk with a CPA. Again, jump with someone that's their thing. I'm a realtor, it's not my thing, but I just want you to be aware that when purchasing a home as a foreign investor here in the US, You want to know the taxes that you're going to have to pay to make sure you make a wise investment. Well, I know most of the people that are watching this and most people that I work with fall into the category of not having to pay taxes. They make less than $250,000 or $500,000 in profit when selling their home. They've lived in their home for more than 2 years. So for most of you, the answer is no, you don't owe taxes. But always do your research and always be in the know when it comes to buying a home, whether investment purposes or your primary residence. Contact the people that do this for a living. Again, I'm a realtor, so I can give you some knowledge and some ideas of what's going on there, but really, you need to contact your CPA to make sure about taxes, what you owe or what you don't owe. Hope you found this helpful. I'm Jonathan McCoy, Atlanta's Real McCoy, and I will see you next time.